So let's start with Uber. Price target raised at Wells Fargo, top pick 2024. Josh, they go to 74 from 64. Stock's had a huge run, as you know, and talked about on numerous occasions.
Yeah, look, I think this is one of the last great TAM stories. If the viewers remember, three to 5 years ago, we were obsessed with TAMs. We would talk about these companies with huge valuations and huge growth, and we would wonder, well, how big could this get? Like, maybe this is in some way justified. And we found out for most companies, it was not justified, but for some, it really was. My bet, this is one of those companies where the TAM opportunity justifies the stock trading significantly higher in the next year or two. I genuinely think mobility, whether we're talking about freight or people or moving food, delivery, whatever whatever category within mobility, Uber is number one in most markets. In some markets, it's number two. It already dominates. It has no real competition. And you're talking about like the last $1 trillion TAM. You also happen to have one of the best chief executives of any tech firm anywhere in the world. Dara deserves a lot more credit than he's getting for the turnaround here. This is maybe one of the best turnarounds of the decade. I think we'll look back and say, wow, that thing maybe could have looked like Lyft if not for some of the incredible moves that management made. And it was not the founder. He came in and cleaned up a mess before turning it. So I think the stock goes higher. I'm not selling. I'm holding, and let's hope I'm right.
Weiss, I know you don't disagree with the total addressable market idea that Josh puts forth. If you just look at plus 138.5% gain in the stock last year, you trimmed it.
I did trim it, so it's still a position. It was never a core position. I just don't think it's compelling to cheap now. If you look out over a couple of years, it gets cheap, right? It's going to be trading on a forward multiple 2 years out in the 20s, which is not expensive. Dara is one of the best CEOs out there. I agree, and I've said that multiple times.
What do you make of the capital return story that the analyst is putting out there?
It makes sense. I mean, they're buying back stock. They'll buy back a lot more stock.
They could buy back 20% of this market cap by 2026.
Right. I mean, well, that's become the base case for analysts now. Yeah. So it's something Dara's whispered to them and told them that's what we're going to do, and that'll support it. But it's also a question of the beta in my portfolio. So again, this is a portfolio management decision. I'm going to perform just as well if I believe what goes on with Meta, with Microsoft. Maybe not today, but that's not doing so great either today. So I like it. It's also got more consumer exposure that I'm really interested in. I don't believe in the freight story. We've done a lot of work on freight, and freight, that has to be extremely reliable. And the Uber drivers are not the most reliable, number one. Number two, you want to know your partners on a day-to-day basis, not get a new partner. So I actually think they'll probably exit freight rather than build a business there.
I took a little bit of profit in this name, but I disagree with you. I think, first of all, as it relates to the consumer, this is almost essential to the consumer, both professionally and personally now. This is a company that has absolutely reversed an awful culture with the founder. Yep. This is a company that now has established itself in a position where you're talking about free cash flow generation. And I think the last thing that a lot of people sometimes forget is if you are a portfolio manager and you're dedicating capital to particular sectors, where else in the industrial sector can you find 3-year revenue growth at 40%? The industrial sector, over the last 3 years, the revenue growth is 8%. This is an industrial name. It's in the industrial sector, and it's given you 40% revenue growth. That alone is a magnet for portfolio managers to look inside the industrial sector and say, I want to be there. That's a growth name.
DC, but I don't look at things like that. You look at things like that.
No, you might
but
not.
I don't look at what's a sector, what's my weighting in the sector going to be.
Steve, I understand.
I'm not criticizing. It's a legitimate way of doing it. It's just not how I run. I look bottoms up fundamental. I look at which I know you do.
But acknowledge there's a tremendous amount of capital that does identify those types of opportunities.
Without a doubt. I think it's misplaced. It's really a technology company. It's not an industrial company, in my view.
I think it's consumer discretionary. I mean, it's part, right? It is a transport. That's why it's in industrials. Obviously, it's transportation. It also obviously is a tech company. But I think, look at the actual usage. That is consumer discretionary writ large. That is a consumer saying, hey, you know what? I feel like having a few drinks. Let's Uber home.
Which is one of the reasons why I sold it, because I think travel comes down. I don't think we're going to be at peak travel like we've been. So the consumer, look, their prices have gone up, and I just think the consumers could be more cautious.